Okay, this is the fourth segment of Bob Lutz's involvement in the destruction of the trade towers and the subsequent economic effects. Okay. This is a quote from CRS 22 of the Economic Effects of 9/11, a retrospective assessment, September 22nd, 2002. Only the United States, with some help from China, has had the size and strength to provide the economic stimulus to world economies necessary to help pull them out of global recession. And this is 2002. General Motors is the best-selling automaker in China. General Motors plans to create a research facility in Shanghai for $250 million to help hybrid cars and alternative energy vehicles. Okay. Central banks are key players in the currency markets, and traders are always on the lookout for signals that heavy hitters are diversifying their FX reserves away from the world's reserve currency, the US dollar. Global central bank reserves have more than doubled to $4.9 trillion in just 3 years, with particular focus on the massive US dollar stockpiles built up by Asian central banks, which could be switched into other currencies such as the Australian dollar. China's holdings of US treasuries have skyrocketed from $59.5 billion to $342 billion since January 2001. There's been a sharp increase in the number of emerging market companies acquiring established rich world businesses and brands, starkly demonstrating that globalization is no longer just another word for Americanization. Within the past year, Budweiser, America's favorite beer, has been bought by a Belgian-Brazilian conglomerate, and several of America's leading financial institutions avoided bankruptcy only by going cap in hand to the sovereign wealth funds, state-owned investment funds, of various Arab kingdoms and the Chinese government. WTO News, September 17th, 2001. The WTO successfully concludes negotiations on China's entry. China joined the World Trade Organization in 2001. This move had far-reaching effects for the automobile market, bringing down customs duties and invited an influx of foreign capitalized firms. From DuPont. Following the September 11th attacks, a severe stock market decline caused a pension and benefit fund underfunding crisis. General Motors began its Keep America Rolling campaign, which boosted sales, and other auto markets were forced to follow suit. The U.S. automakers saw sales increase to leverage costs as gross margins deteriorated. Although retiree health care costs remained a significant issue, General Motors' investment strategy has generated a $17.1 billion surplus in 2007 in its $101 billion U.S. pension fund portfolio, a $35 billion reversal from its $17.8 billion of underfunding. From November 13th, 2006, way before the General Motors bailouts became popular news. They were just in economic magazines and car magazines. From the rising cost of retiree health care to the advantage of weak yen gives the Japanese, the Detroit automakers will press for more recognition for their issues, something industry executives say has been lacking from the president. But they will make clear that their concerns do not add up to another seven-letter word, bailout. The meeting should enhance the president's understanding of the importance of the domestic auto industry to the economic health of the United States, says General Motors Vice Chairman Bob Lutz in a recent interview, and emphasizing the word domestic. All sides expect no firm commitments from the scheduled 45-minute session in the Roosevelt Room, which will include Treasury Secretary Henry Paulson. So Henry Paulson and Bob Lutz met back in 2006.